Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Service International Limited. I'd like to bring you some foreign exchange charts, and the first one I'd like to look at is the euro against the dollar. Now, if we look at this, we can see the following. A follow-on lower yesterday to the previous session's not unusual bearish inverted hammer pattern, this time with a bearish opening black Marobozo. The market opened just under the short stroke medium moving average, currently 117.95, and dropped down. And interestingly, through the next significant support, which is the old neckline, currently 117.44 of the August to September head and shoulders top. It did not go much further. It failed to reach the recent lesser Fibonacci level at 116.89 and the rising medium moving average, currently 116.53. Instead, it moved back up to close right on the neckline. So far today, a move either side of the neckline, currently a little lower, but not really doing that much. The next chart to look at is cable, aka sterling against the US dollar. An immediate countering bearish engulfing pattern yesterday to the previous session's bullish double. The recent support exhibited by the short stroke medium moving average, currently at 130.13, has seemingly vanished. Though the move down through the seemingly discredited second larger rising bearish bump and run reversal trend line, which is currently at 130.02, perversely makes it more interesting as an attractor. In the process, it is reviving the whole idea of being a bearish pattern. It's not convincing as yet, but it's getting there. The actual day's action had a long tail below, which ran into some congestion as it approached the next significant support, the gently rising medium moving average, currently 128.74, before closing just under the overhead trend line. So far today, all is seemingly forgiven as the market has started by moving back over the trend line and the short stroke medium moving average. The next chart to look at is euro against sterling. An indecisive spinning top yesterday. The recent mild bearishness seen this week finally got caught up on support from the lows from the past 2 weeks in the 90 even to 90-10 area, causing a reversion back up at the close. It was nevertheless a second consecutive close below all the moving averages, bar the long moving average, which is currently 89.05 and is below. So far today, the market has utilized the nearest overhead resistance, the medium moving average, currently at 90.50, as a source of bearish ammunition and is currently trying once again to tackle those lows in the 90 even to 90-10 area. The next chart to look at is the US dollar against the Indian Rupee. A counter to the counter yesterday, a bullish, long, white Marobozo. Prices initially opened over the combination of the Fibonacci congestion area that has within it the 50% Fibonacci line of the September 2019 to April 2020 move at 73.67, as well as declining short stroke medium moving average, currently 73.66. They rose swiftly and punched up through the June to date downtrend, currently at 73.71, and the important 50% Fibonacci line for 2020 at 73.84, stopping at the next resistance. That's the 50% Fibonacci line of the February to April move at 74.26 and finally closing just under this. Now, I've cautioned repeatedly, we've not had two consecutive closes over the 50% Fibonacci line at 73.84 since we dropped back below it in late August. It now looks like we may, so watch carefully. So far today, an initial move back down, but a reaction back up from the 50% Fibonacci line at 73.84, now acting as support this time. We've punched up over the next 50% Fibonacci line at 74.26, and we're now tackling the medium moving average, currently 74.34, and maybe soon the long moving average just above, which is currently at 74.43. This looks like it may be the start of a major move. Finally, I'd like to look at US dollar against the Brazilian real. A follow-on high yesterday from the previous session's immediate countering key reversal up. The market is now stabilizing over the 565-570 area, which has served as a cap since late September and again back in mid-August. Now, we have some congestion in a 581.80 area overhead, but it isn't that strong. Significant further resistance is still being provided by the middle time, currently 591.64 of the late July to mid-September bullish Andrews pitchfork. However, caution, this is now some way away and is still moving higher each day. Just in case, support below is layered between 557.33 down to 551.33, though this is also moving higher each day. So in the meantime, good trading and stay safe in the markets and in real life.